The catastrophic impact of Evergrande's collapse. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's have a look at an article written by Tarek Brooker discussing, well, the Evergrande impact and how Australia should be worried from an Australian perspective. Now, I'm a bit skeptical about some of the claims of the global impact that Evergrande is going to have, if it's the new Lehman Brothers, if it's going to collapse the global economy. Quick, rush into your gold and Bitcoin, everyone. But, I would agree that it is certainly going to have an impact here on Australia. I'll bring up this one example, this one little chart here. This is showing you just the West Australian government revenue, all of their revenue from 19 to 20, where it's coming from. Nearly a quarter of it is coming from iron ore. Now, our biggest destination for Australian iron ore, well, we all know where it is. China loves Aussie iron ore. And, well, a decline in Evergrande means a decline in the housing sector, which means a decline in demand for iron ore in Australia, which will have flow-on effects to our economy here, particularly in WA. So let's have a look and see what Tarek has written here about this. So, as China's Evergrande implodes, Australia should be worried. The Chinese and Australian economies are inextricably linked, and Beijing's latest fallout could prove to have a profound impact on us. One thing you may not realize is that investors will buy Australian dollars as a proxy for the for the China economy. That's how they see it. So, what does that tell you about Australia and China and how we're antagonizing our relationship with China? Which, hopefully, there will be new opportunities. There will be other traders. They're not the only country in the world that demands resources. And Australia has good quality, easy access, so there are some advantages. So American author Mark Twain once said, "It ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so." He likes... Tarek likes his quotes. One thing I find with how he writes these articles is he's appealing to a wider audience and, exposing them to economic ideas. And I think some people will criticize him as being a bit of a doomer or a perma-bear. I don't see it like that. Just reading his stuff, he seems like, probably a bit cautious, shall we say. Which is, prepare for the worst, hope for the best. That'll be my suggestion, and take a stoic outlook to life. So you don't really get affected that much by anything, really. So, as mega Chinese property developer Evergrande continues to implode, these words cut deep for an Australia that has bet the farm, the mine, the vineyard on a strong Chinese economy and the education sector and investment apartments as well and tourism. Come on. For years, the expectation was that China's economy would continue its multi-decade run of world-beating growth, thereby supporting our economy. Now, here's the thing. We got lucky. We got lucky in the GFC because China pretty much dragged us out of it. No economic management by any of our political leaders. Just bloody luck, guys. Okay, that's the truth of it. Now, what did we do with that luck? Where did we invest it? I'll have a shot of coffee. It's early in the morning. I need it. And you let me know in the comments where you think all of that luck went. What do we spend that luck on? Nope, not coffee manufacturing factories, which probably would have been a fantastic idea. Property, guys. Through international students, resource exports, and the sale of homes to Chinese citizens, year by year, Australia has become more and more reliant on Chinese capital and staying in Beijing's good graces. But as the fallout from the troubles of the Chinese property sector become increasingly evident, it's clear that Australians may have to pay a penance for the nation's failure to sufficiently diversify the economy. We saw that remember Chinese New Year last year, when the lobster industry in WA pretty much was screwed. They've become so dependent on China. But years back, even before then, they were so dependent on the US military. How much is lobster here in Australia? We're talking WA. Shipping it from WA to the East Coast is a huge trip. But how did we get here? How did Beijing go from being relied upon for bailouts to the Chinese Communist Party now allowing one of the world's largest companies to careen towards default? The world has changed. In the wake of the GFC, the Chinese government employed an enormous program of construction-driven stimulus in order to support the economy. While the program was successful in its broad objectives, it has come to be seen by many within the halls of power as going too far. Well, we saw that example of we did a video about the Beijing, the woman who grew up in Shanghai, only child, hundreds of millions of dollars of yuan in assets, or 100 million yuan in assets. 5 apartments the parents own. She owns like 3 or 4 with her husband. His parents own a whole heap of them. Property only ever goes up. Everything's invested in that. It doesn't feel like your grandfather's communist, does it? No, it doesn't. Yet despite these concerns, the construction-driven growth model continued and became even more relied upon. Chinese leaders such as former President Hu Jintao repeatedly reiterated the importance of rebalancing the economy away from construction and towards a more consumer-led model. But it was not to be. I mean, look at those towers, guys. Would you want to live in one of those things? It'd be shit. It really would be. Yeah, we got the same thing here. It may just be a cultural thing. Okay, it may just be my Western Australian cultural outlook, having grown up with a backyard, wanting a backyard, living in a country where there have been lockdowns, here in Australia too. Remember when we were all shocked when they were welding the doors shut to apartment buildings in China? Remember? We don't need to weld here in Australia. It's more efficient when you have 50 police standing there. And they only do it in the poor suburbs in Australia. So we're completely different to China. Such is life. As with the COVID-19 pandemic continues to impact China, Beijing's priorities have seemingly changed significantly. With around 1 in 6 urban Chinese youth, 16 to 24, unemployed, and millions of small business owners doing it tough, the idea of spending an enormous sum of money to bail out offshore investors and wealthy domestic bondholders would likely go down like a lead balloon. That's not to say that some form of rescue won't come. It almost certainly will at some point. With 1.4 million homes slated to be completed by Evergrande for property buyers and more than 3.8 million people directly or indirectly employed by the giant, it will likely not be allowed to just fall in a heap. Instead, a restructuring that protects property buyers, retail investors and suppliers is likely, allowing President Xi Jinping an opportunity to show the Chinese people that the CCP has their interests at heart. And we've started to see talk about that and preparations about that in the other media. The Chinese Communist Party's power. So, as the unequal nature of China's economic recovery becomes increasingly apparent, the central government has seemingly been looking for ways to prove to its people that they are its number one priority. Where once a simple share of the spoils of China's rapidly growing economy was enough, as growth becomes more concentrated in selected industries and locales, it has become a much more challenging prospect for Beijing. Prior to the pandemic, this is already a brewing issue, as President Xi attempted to stamp his place in China's history books alongside Mao. Reigning in power of China's tech giants, Beijing is attempting to make its case that it is a strong force for the betterment of Chinese society. As an individual who was heavily impacted by Mao's Cultural Revolution in his adolescence, President Xi is accurately aware of how important maintaining broader social stability is. While markets and some wealthy Chinese may want to continue with the never-ending bailouts, he is seemingly taking another course, a route in which people are the primary focus. If asset holders get burns, it may all be better for its credibility, for his push for common prosperity. So the potential impact for China. According to an analysis from Goldman Sachs on the impact of Evergrande's woes on the property sector, Chinese GDP is expected to fall between 1.4 and 4.1%. Now, here's the thing. We've had such a good time with Chinese GDP just growing, and Australia riding the back of that. Here's the thing. everyone. We got bloody lucky, and frankly, we're pissed it away on housing. That's what we've done. And now we've got such a huge divide here in Australia in household incomes that's just getting even worse. You've got some people struggling, and you've got others who are just kicking goals, who don't even notice it. That's why you've got people who don't understand how people can buy these houses at such huge amounts, when others can, drop $1,000 a week on repayments and not even bat an eyelid. So, not fantastic news for an Aussie economy that catches a cold when China sneezes, no COVID pun intended. But perhaps more concerningly, new Chinese housing starts are expected to drop between 15 and 30% during 2022. While the current crop of projects is likely to keep iron ore demand relatively stable for a time, on a longer-term time horizon, the impact on the Australian economy becomes more clear. If these scenarios were to be realised, China's iron ore consumption could drop by between 6 and 12% as the current crop of projects is completed. While these numbers sound relatively innocuous on paper, in reality it could tip the balance of supply and demand quite significantly. Since iron ore prices peaked at almost US $240 per tonne back in May, cuts in Chinese steel production have already driven the price down by almost 60% to sit briefly below $100 per tonne. While the federal budget conservatively based its estimates on iron ore prices sitting at US $55 per tonne, it did not anticipate any further significant impact from lockdowns and virus restrictions. Prior to parts of Australia heading back into lockdown, it was looking like the enormous iron ore price windfall could help the Treasury plug some of the holes in the budget. But with more than 11 million Australians in lockdown and the iron ore price less than half where it was in June, the likelihood of the Morrison government or its successor having to make tough budget choices after the election has risen substantially. Really? Won't they just kick the can down the road until the next election, until the next generation? Isn't that the way to go? I mean, we look here at government debt. Just keep kicking the can, guys. She'll be right, mate. Don't worry about it. Maybe I'm getting too cynical. For years, Australians have ridden the Chinese property boom gravy train, with many believing that it would continue for decades to come. But to paraphrase Mark Twain's famous quote, it wasn't. What we don't know that got us into trouble is what we thought we knew for sure, but just wasn't so. So there we have it. A piece by Tarek on Evergrande. What do you think, guys? Let's have a bit of a talk about this. Well, he's making a lot of sense there. Our dependency on China, particularly saving us from the GFC, it's well known. I think you'd be foolish if you didn't realize that's what got us out of it. It wasn't any economic management from any of the politicians, any of the parties. Rudd's little money that is burning away, or the building education revolution, which we've seen has now had no impact on improving education quality. They were just flashes in the pan. That was just political posturing. One thing that's quite interesting is if we look at GDP growth per capita since the GFC, we've actually been growing below trend. So, economy's growing, we're doing good, it's all great. Population's growing as well. So per person, we're growing less than we ever have been. We're steadily growing down. Most of the years were below trend than above. So will this have a calamitous impact on Australia? Will it affect our property prices? Because that's what we're all worried about here, guys. That's where all the money has gone. We'll have to see. I suspect the government will do whatever they can to open the floodgates, to get more people coming in and incentivize people to come back to Australia. And that'll flow through to property, flow through to education. It may be a tough little stint, but we'll have to see what happens. Will it be a catastrophe? You tell me. We'll have to see. But I think Tarek's on the money here with his highlighting the concerns of impact this is going to have on Australia. And we need to be aware of, frankly, how lucky we had it, guys. How lucky we had it here in Australia. As always, thanks for watching. Like, share, and subscribe to the channel. If you're a fan and enjoy the news that I find and cobble together here, there's a few ways you can help out. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. Have a great day. I'll see you next time. Bye for now.